In Latin America, Skin Cariol, a very unique platform in Brazil, which actually the #2 beer company in Brazil, but with a very strong portfolio in soft drinks and water. Suntory, as I said, one of the Asian giants, record profits in 2010, expanding into Europe, Australasia, with a very dynamic growth strategy. Tata, a very interesting platform that is becoming increasingly active in the U.S. market. They recently made an investment in Activate, a cap closure system, but with a very strong commitment to health and sustainability. Tingyi is a very interesting joint venture with Asahi in China, playing on the growing beer industry there, as is Qingdao, the leader in China. Two other companies that I think are not on everyone's radar screen, but should be. Ulker is a large Turkish conglomerate, but just signed a joint venture with Ekis Granini, and also have a very successful cola business in Turkey. And last but not least, Yili, a very innovative leading Chinese dairy company. So these are 10 that I think represent really what's going on in the global beverage industry today.
Oh, thank you very much, Ross. Now, by this stage, normally in a webinar, we would have a few questions, but we haven't at the moment. So if you'd like to send through your questions, if you've got problems getting them through, then I don't know how we're going to deal with that, because maybe Ross and I will have to imagine some questions for each other. But we'd be very happy to take any questions about what we've said, about the broad trends, about some of the commentary that we've offered on the marketplace. So do send through any questions that you would like to raise with us. I'm going to ask Ross one. Ross has been working with Zenith as a director for the last 3 years, and he recently switched across to Rabobank, and so he now has a sort of a global view with a financial interest. And I just wonder, Ross, whether you might comment on the latest swathe of company results we've had. I mean, how are the companies doing in the big quoted companies in the current economic climate?
Well, I think, as I mentioned earlier, the biggest concern is really commodity costs, soft commodity costs, and it's really affects everyone across the value chain. So I think the challenges for 2011 will be how to mitigate those commodity risks, and it clearly puts tremendous pressure on those brand owners that rely on third-party manufacturing, who may not have the purchasing scale or the ability to hedge against soft commodity risk. That would be my biggest concern. I think Coke and Pepsi also, as they go through their restructuring here in the U.S. market, are certainly going to impact new distribution strategies for 2011.
Right, questions are now coming through. I was beginning to wonder whether our system was working properly, but it clearly is. First question is, how would you characterize capital availability terms in the North American market? I guess that's one that I can't answer, but you may be able to, Ross. So availability of capital, but in fact that affects everyone, doesn't it? Because capital is becoming very difficult for the small startup entrepreneurs.
Well, my sense is we're starting to see deals are getting done. Obviously, they're requiring a lot more equity than past years. Typically today, acquisition will require 50% in equity capital and the balance in debt financing. The debt markets are opening up, as are the bond markets. So larger size transactions will find funding. Smaller, early stage opportunities are still a challenge, as is startup financing.
Yeah. I've got a blog called bevblog.net, and I'm going to go live tomorrow with a new mergers and acquisitions database. And I'm tracking more than one M&A deal in food and beverages every day. And I must have covered 400 or 500 in the blog so far, and I think I was tracking 36 in January, and I've already got up over 20 in February. So there's really quite a lot of activity still going on. Next question was, what trends do you see for package design and identity, especially logo design? And other than what we've already talked about on closures. So trends in package design and identity. There's certainly, everyone is trying to individualize their packaging. I think one of the features in design that's happening is lightweighting. So a lot of technology is being applied to design in terms of individuality and lightweighting. Beyond that, I think that PET is seeing a great deal of emphasis, the clarity and safety and stability of that as a packaging material. But all the other packs, there's massively more innovation in cartons and glass at the premium end, although smaller in volume. And cans, too, are seeing a great deal of embossing and new closures.
I would say one of the influences in consumer packaging design has really been Apple over the years.
Yeah.
More and more companies are looking to emulate the clean, refined look of Apple products. And I think in labeling, the challenge ahead, the beverage industry in the U.S. has taken the initiative of changing and including calorie count on label design. So building that into a label design that communicates the product benefits without cluttering packaging design.
Yeah, that's a big change that consumers will see this year, isn't it? Because there have been promises from the US companies, front of label, by the end of the year, I think, on all of the main American companies' products, and I think some of them are trying to make that global as well. Next question, what do you think is the biggest innovation in the closure market? I would say smallness, actually. Making closures ever smaller, ever lighter, and astonishingly so. But I guess that one would have to look to future growth in the self-dispense caps and closures. What do you think about that?
Yeah, I think dosing caps are becoming a very interesting option for brand owners to consider. I think Tata's investment in Activate legitimizes somewhat the consumer proposition, and I think it's going to be up to brands like Activate and others to educate the consumer as to what the benefits are, how it's used. I think the challenge for the brand owner will be how to do that, how to use those closures, how to bring the cost down so it's affordable for the consumer and profitable for the brand owner.
What do you see, where do you see large beverage players consolidating outside of the United States? That's a very good one. We've already talked about the Japanese giants breaking out. There's clearly been quite a lot of consolidation in East Europe. The South American players have gained extra strength. The brewers have done quite a lot of work down there. There's been a lot of activity.
I think what drives beverage brand consolidation correlates directly to retailer consolidation. So where you see markets such as here in Western Europe where retailer consolidation has been ongoing for a number of years, it really is a more consolidated market. I think on the heels of that you see brand consolidation and wholesale and distributor consolidation. But to your point, outside the U.S., I think we're going to see the breweries around the world, whether it's Asia or SAB Miller, becoming much more active in that space.
I think the answer is where do you see it? Wherever they can, probably.
Right. Yes.
Next question was, what's your take on in-home beverage systems growth, like soda systems out of Israel? SodaStream seems to have been growing quite a lot in presence and impact from Israel, and I think I read just very recently there was another new location being established by that company. On the whole, the technology has been something that people have been keen to buy but not keen to go on using in the home because it's just less convenient. SodaStream seems to have conquered some of that and strengthened its offering. I wonder whether it will be a mainstream development, challenging the rest of the market.
I think that's a development that's still needs some work. I'm not sure that it's a segment that will really offer much growth or an opportunity outside the U.S. or
growing but
Western Europe.
Growing but limited, I would go along with too. In the health and wellness segment, do you see powders with the emphasis on freshness having an edge? In a way, does that bring us back to self-dispense caps, which actually contain the freshness of the powders and probably make a product shelf life, especially with functional ingredients, last fresher longer? I think that shelf life is an important aspect of more niche products. The mainstream products shift off shelf very quickly, but some of the other products deteriorate or could deteriorate with long shelf life or with poor distribution systems in some emerging market retail networks. Powders seem to have picked up. I mean, they've become less convenient. They've become more of a cheaper alternative. But in fact, they've grown quite strongly.
Yes, they have, and I think, well, on the heels of, at least in the U.S., with in a softer economy, powders have I think they've done, they've done a great job. Certainly, Crystal Light has really rebranded itself. I've been very impressed with their execution at retail, and I think that legitimizes powders in other flavors and ingredient formats. So I think we'll continue to see growth in powders.
Okay, next question is, what do we see happening with the vending channel worldwide? Well, chilled distribution seems to be what is working well for big brand companies, getting product to consumers in the exact quality that they want their products to be consumed.
I think there's innovation in vending that is, I think, could have a big impact on the growth and penetration of vending around the world.
We're getting wireless now, aren't we? We're getting more environmentally friendly.
Yes, it's harnessing the technology that can optimize vending throughput.
What about mobile purchasing? Do you think that that's going to be something that takes off?
I think it's already being used in developed markets, particularly in Japan. So I would expect as Asia begins to really show segmentation in terms of channels, I think the vending channel, it's probably too early for China for vending, but it's been so strong and so dominant in Japan that I think it's just a matter of time before it penetrates further.
It'd be very interesting to see whether, if some of the costs can be brought down, then we could see huge numbers of machines out in China, couldn't we? I think I probably ought to draw us to a close. I should remind you that we've got some special offers to those of you who've borne with us. It's been very good to have you with us for the last 30 minutes. There's a discount on new bookings for the Global Beverages Summit, and I think that if you do it this week, you also get a free printed copy of Beverage Innovation magazine for the rest of the year. There's a 10% discount on our latest emerging market reports, and if you want any more detail or anything, just send me an email and I'll forward it to the right people. I should also let you know that these slides that we've been using in our presentation will be emailed to you after this webinar, and there is also available an audio file of the webinar. So, Ross, I do wish you well in your new role in Rabobank. Thank you for joining me.
Thank you. It's great to be here.
Thank you, all of you, for joining us. And if you've got any other email questions you'd like to ask us, please send them through at any time. Very good to have you with us. Hope to see some of you in Washington between the 29th and 31st of March, and otherwise around the world in your marketplaces, where we'll be observing all the innovations that you bring to us. Thank you very much.